Ripple XRP holders will become the wealthiest in their family virtually overnight, and it'll happen so fast that it will shock the world. Now, I know that sounds like a pipe dream, but I've been around crypto for going on 8 years, and I saw it happen back in 2017, and we're going to see it happen again. Now, the real question is, when will it happen? How long do people have to wait? And how many will they shake out before we see the largest inflow of volume and liquidity into the crypto market, specifically into XRP? Because as you guys know, the crypto market has absolutely skyrocketed over the past year with projects like Solana, Avalanche, meme coins like Bonk performing astronomical numbers. The real question is, when will XRP have its turn? So in this video, we're going to be talking about just that. I'm going to be sharing with you critical information that you need to know that's going to paint the picture for the next few years for the future of XRP that you need to be ready for. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping the like button, tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So we're looking at the XRP, the US dollar price chart. We're going to also get into Bitcoin and share what's happening in this Bitcoin cycle right now on when a correction could be taking place, Google Trends. We're showing you guys other charts as well too, some other projects, massive news, exchanges launching, overall bullish news taking place in the crypto market with these ETFs coming on the horizon that you need to be ready for. So we're breaking down a lot, and then also as well too, when a potential correction could be taking place that you need to be ready for. So as much bullish news as there is, I do want to warn you right now that when a correction takes place, you have to be ready for a 20, 30, 40% correction leading into Bitcoin's halving. Now, when that will happen, we're going to discuss towards the end of this video. But the first portion of this video, I want to talk about what's been taking place in the crypto market and give you guys an overall macro look on XRP, on that title that I put on this video of overnight, right? I know it sounds like a pipe dream, but I've seen it happen. It happened for me in a lot of projects, guys. Back in 2017, my income took astronomical leaps and bounds to the beaches of the moon back during that bull run. And then 2021, it happened again as well too. And so I've seen it happen time and time again, not just for myself, but thousands of other people out there. And there will be lots of millionaires made this bull run. And the people that are sitting on the sidelines watching that think it's too good to be true, usually are the people that complain, blame, or justify when other people are just taking advantage of opportunities like the crypto market right now. Because look back in the 1900s when the stock market was taking off, crypto is the new form of that for this generation. And so with inflation at astronomical numbers, continuously getting worse, the economic macro landscape, looking bleak for the future generation, to get wealthy in this day and age, based on what Robert Kiyosaki says in the cash flow quadrant, you have to go from being an employee and a small business owner over to a big business owner and an investor. Now, to become a big business owner, that takes time. And so I'm an advocate on both, doing both at the same time, building a business and being an investor at the same time, so you can compound your wealth a lot quicker. You don't do one or the other, and then also you don't just stay on the left side of the quadrant, just being an employee or a self-employed, basically just owning a job. You have to know where to put your money at the right time. And I'm coming out with a video here soon that I know you guys are going to love, that's going to share with you the top 10 tips that I learned from billionaires that helped me become a crypto millionaire. So I'm going to pass that information along to you guys. Make sure you subscribe, like this video, but let's dive right in. So XRP is sitting at a $33 billion market cap at about 62 cents right now. And it's been hovering at this range for an extended period of time since November, beginning of November, whereas other projects have taken off. And there's a few things that are going to come next for XRP, depending on what happens with Bitcoin, because with Bitcoin leading into the new year, depending on when you guys are watching this video, it might already be the new year. I'm recording this on December 30th. So by the time you're watching this, it's either going to be January or the end of the year. So going into these ETF approvals, there's a lot of buzz, there's a lot of excitement right now. So in crypto, how these markets work is people, they buy the rumors, and most of the time, not every time, they sell the news. And so what does that mean? Well, the rumors of an ETF approval coming is what's spiked Bitcoin up from, middle of October of $26,000 upwards of, $44,000, $45,000. Now, the real question is, will we get an additional push going into the ETF approval? And then if the ETFs are approved, will we see an additional push beyond the 618 retracement? Because if we were to draw from the all-time high of Bitcoin to the low of November down here at about $15,000. A 618 retracement has historically been the area where Bitcoin rallies into and then sees a sell-off going into having the last few bull runs. And so that would be push up to $48,500-ish right here. Now, the real question is, are we there already? Because depending on where you're drawing your Fibonacci retracement from the actual all-time high or the first high, which is arguably considered the real high based on Google Trends, because when we look at Google Trends right here, you guys can see the interest for the keyword Bitcoin was 98 at 100 out of 100 in January 3rd through the 9th of 2021. Now on the chart right here, that was all the way back here when Bitcoin was around $41,000, and then it saw one final rally up to $64,000 before crashing down, and then seeing this dead cat complacency stage bounce right here for the actual all-time high. So arguably, people could say that the real high for Bitcoin based on interest, search volume, because crypto is people's money, right? So gold is God's money, fiat currency is government money, and then crypto is the people's money, the people's currency, to put control back in the hands of the people through decentralization. Well, if that's the case, then we would base the real highs in the market based on search volume of people, and Google tracks that through Google Trends. And so the real high for Bitcoin was the first peak for Bitcoin. So if we were to draw that here for a 618 retracement, that would put Bitcoin up to about $45,000 at the top. Now, arguably, we almost hit that in early December up to that period, and to do a $48,500 would push us almost up to a 702 retracement for Bitcoin. Now I'm going to be sharing with you guys, and I've shared with you in previous videos what I think is going to happen next, but here's a scenario to look for, because at the bottom of the screen we see the open interest aggregated, which basically shows the total interest in leveraged traders that I covered in one of the previous videos. And as the interest climbs up, what these exchanges do, these centralized exchanges, and how these markets move, where you see periods where these massive green candles push up really fast, it doesn't allow new traders to come in to add a lot of leverage to their position if the markets consolidate for too long for these periods of time. So the markets will push up quick, and then they'll sell off really quick to liquidate longs or liquidate shorts. And so what we're seeing right here with this consolidation period, a major move is going to come very, very soon for Bitcoin. Now, to the upside or to the downside, we need to look at support and resistance zones to watch for. So as you can see on the open interest, it's been climbing. It's at 3.782 billion. So there's going to be a few scenarios that happen depending on which one plays out. I'll explain my strategy on what I'm doing and how you guys can prepare, because as you see this rising support right here, we're at about 3.782. So if we see leading into Bitcoin's having Bitcoin's ETF approvals early January over the next week, if we see them get approved, I would expect, now I could be wrong here, again, this is not financial advice, don't buy, don't sell anything we talk about based on this. This is all speculation and all news-based information in these videos, guys. You obviously understand that. I don't have to insult your intelligence. But if we see a move to the upside and we see Bitcoin break out of this descending resistance and push higher, I would expect the open interest, to climb up and push in this overly leveraged zone right here. And as you guys can see in the past, when we were up here, upwards of 4 billion to almost $5 billion in leverage, then we see these leverage traders get wiped, and we see it trade to the downside, and we see Bitcoin correct very, very quickly, and we see a massive pullback. Now, each time that this has happened, the last time was right here, $45,000. We saw it creep all the way up here of $4.6 billion in leverage. All the way back here, we saw Bitcoin all the way at $4.35 billion in leverage. Right after that, we saw a little push higher, and then we saw Bitcoin fall off a shelf for the low. The time before then was all the way back here at the range high March of 2022 that we're pushing back up to retest. When Bitcoin was at 48,700, and we saw Bitcoin fall off a shelf during all those collapses like FTX, Terra Luna, Celsius, etc. And then back here, we saw this period, and then we also saw this period right here at the all-time high. And so each time that Bitcoin is pushed up to see leverage all the way within this area, it is the best possible time to short the market. So if we see Bitcoin rally up in the short term leading into the ETF approvals and post ETF approvals, if they get approved, I would err on the side of caution. And you're going to see a lot of emergency titles and warning titles in my videos coming up over the next week or two leading into January. While everyone else, 99% of people, are going to be screaming like crypto's going to the moon, we're bullish, it's going to be insane, I would err on the side of caution up here if we push upwards of $48,000 to $50,000, because I believe a deeper correction would be coming in leading into Bitcoin's halving, and that would mark the high not only of 2023 but of early 2021 going into April, as we've seen Bitcoin correct into the halving, every single halving prior to this. And so that doesn't mean that's going to happen this time, obviously, but if history is any indicator, that's the thing that we have to look at now. And then leading into, what the Federal Reserve decides to do later in 2024, we'll get into that, because I think the end of 2024 going to be very bullish, specifically with election year. They're most likely going to be pumping the markets. They could be pumping the markets so it looks good for the Democrats to, for election year and all that good stuff, right? Why would they want the economy to be collapsing going into election year? So anyone can print money and make it seem like the economy's doing well, like the markets are doing well. So like, yeah, look, while we're in office, we made you guys a lot of money, so vote for us again. That seems like the most practical approach, but it's not even practical. It just destroys fiat currency, but it does pump the market so you guys can capitalize on that. But going into Bitcoin's halving, I expect some volatility, some turbulence. Now, how deep will the correction be? It's anyone's guess. I just say expect 20 to 40% corrections on the way up over the next couple years. We haven't really seen a major correction all through 2023, other than this period right here, where we've seen these corrections and these pullbacks take place, 22% right there. We saw one from April of 2023 until June of 2023 of another 20%. And then we saw one right here, and it took about 60 days, another 20%. And so we've seen a rally the past few months, right? Since September right here. Bitcoin's rallied up over the past 100 days. We're due for a correction. You guys obviously understand that. So to be aping in right now and to be putting the majority of your income into the markets is very, very risky. That's not a smart play. The best time to be buying was back in September and October, and then obviously all the way back in December. So I bought Bitcoin back here when it was about 16,500 or 700 bucks. I bought Bitcoin right here, and I was banking on the fact that we were going to rally out of here. Now, if we went lower, the risk to the downside was only $10,000 to $12,000 in my mind. So I was willing to buy here to see one final drop, knowing that we were eventually going to break out of here, even if we went lower. So my risk to reward ratio, I was fine with getting Bitcoin at 16,000 bucks, even if we broke lower. Now, in terms of risk to reward ratio, now I'm not buying Bitcoin right now because the risk that we fall either now or we push higher and fall is very, very high. So the potential to the upside to do a 618 retracement is either 8 to 15%, somewhere up there between 8 and 15%. So if I were to buy, let's say if I put $100,000 into Bitcoin right now, to make $8,000 to $15,000 on that, with the risk of us seeing a larger 20 to 40% pullback going into the halving, in my mind, is not worth it. But I will be talking about XRP also and sharing with you guys what I think is going to happen based on Bitcoin. Because if we push higher in the short term, going into the ETF approval with Bitcoin, I would expect XRP to see a break of this descending resistance in this symmetrical triangle right here. And XRP's break to the upside, I would expect to be massive, guys. I would expect it to push upwards of 70 cents to $1.30 in the short term, because XRP has been coiling up for an extended period of time. And obviously in the macro, it has the clarity that it needs. The partnerships I'm going to be sharing with you guys in this video are big, but there could be a shakeout event in the short term before we see that push, because looking at the open interest right here, we see this upward trending support line right here. Now, the real question is, if we tag this support line in interest and shake out a lot of the people that are longing XRP right now really quick and just see this like temporary quick crash, with Bitcoin before the ETF approvals, and that would mean Bitcoin would be selling off to the downside, going into the halving really fast and going down to 38 or 40K, liquidating a lot of the people that are long in the market right now. And then we see something like this take place, where then Bitcoin snaps out of here. And so I would expect a scenario like this to be pretty likely, guys, because, to liquidate these longs, a quick flash crash, shake everyone out down here, then we push higher, and then we see a much deeper correction. So the risk to reward ratio right now based on, a quick correction happening to 38 to 40K, liquidating a lot of these longs right now, then mega rally going into middle of January, towards the end of January. Google approves advertising, and then all of a sudden now these companies are starting to advertise on the way down, right? Bringing people's money into the correction on retail money coming in, and then we see Bitcoin form a deeper correction going into the halving, and then we work our way out of here for choppiness middle of 2024, then leading into the end of 2024 to election year. Then we see them pump the markets past the all-time high. This is what I'm expecting. Now, if you guys agree, like this video. If you disagree, throw your thoughts in the comments below, letting me know why. But the reason why I believe, we're going to see, a push to the upside in the short term, regardless of whether we have a $38,000 or $40,000 Bitcoin before the ETF approvals, and then we break out of here really fast. I'm not selling. I'm just holding right now. But if we've already seen the top and we see a much deeper correction right here, I'm just gonna be holding long term either way. But if we see a push up, guys, if we see a push up to $48,000, $50,000 Bitcoin, I will be hedging some of my portfolio. So my strategy right here to hedge is going to come if we push higher. Now, if we don't push higher, I am completely fine holding long term, knowing that I'm holding the right assets. And overnight, when it does happen, it will be big because of how long XRP has been coiling up. And we see this upward trending support right here since June of 2022. This reminds me of Chainlink, right? Where Chainlink, consolidated and coiled sideways for over 500 plus days. XRP has been sideways for over 560 days. And so the longer the consolidation period, the tighter the consolidation period, the more pressure that builds for the breakout. Now, for XRP to break to the downside, I don't see XRP going back below 30 cents. Unless there's some catastrophic event, then overall, the entire crypto market would get wrecked, guys. And so XRP, in my opinion, is the safest, the most secure, and the best risk to reward ratio hold long term. Now, that doesn't mean that you should hold it, but the fact that in 2021, we didn't see a bull run that passed the high of 2018, whereas for Bitcoin, we did see Bitcoin pass the high of 2017 leading into 2021 by an additional 250%. Because we didn't see that for XRP due to the lawsuit versus the SEC, my belief that this bull run going into 2025 will outperform what we could even imagine as possible that happened back in 2018. And this is leading into the Bitcoin stock to flow as well too. Now, looking at the Bitcoin stock to flow model, this shows the days until the next halving, and it shows from red to purple on where we are. And so we're getting close to zero. We're about 100 plus days until the next halving. The halving is happening, beginning of, it says May 3rd right here. And the stock to flow line is about $52,000. We're below that right now. Now, looking at the past, what happened when we went from blue to purple? We saw a rally before the halving leading into purple. Then between purple and red, once Bitcoin halved, we saw a sell-off right here. Obviously, it was COVID, Black Swan event in March, and then rally into the halving, consolidate, then break out 6 to 12 months after the halving. The time before then, back in 2016, when we went from blue to purple, we rallied into purple. We saw a sell-off into the halving, consolidation 6 to 12 months after the halving, then a rally out of there. The time before then, back in 2012, from blue to purple, we rallied up. And then around purple, once we turned purple, we saw a sell-off, consolidation, cool off, 6 months or so, then we rallied out of there. So to believe it's going to be any different, not very smart, right? I believe it's going to be very similar. So I think that history has a funny way of repeating itself, and people have a funny way of thinking history is going to be different every single time because of some narrative that's taking place, right? The narrative of ETFs is not new. Just the spot ETF is what's new, but futures ETFs, the sell the news events is what took place multiple times in the past, guys. So I think we push up. Even if 38 or 40K Bitcoin, okay, even if we hit 38 or 40K, I think we shake out a lot of the leverage and we liquidate a lot of the leverage traders really quick. But then we see one final push up, early 2024 in January, and then we crash. And we crash into the halving. Once we go from, once we're in purple, we see this deeper correction. Now, will it bring Bitcoin back down to 30K? We will see, depending on how much higher we push up or if we push any higher in the short term. But to see if we go to a $48,500 Bitcoin, to see a 34% correction would bring it back down to 31. To bring it back down to $30,000 would be a 38%. So I don't see why Bitcoin couldn't come back down to $30,000, from some type of shakeout event. And then that's when the ETF companies, BlackRock, Fidelity, you got Van Eck, you got ARK, 21 shares, start dumping massive amounts of money into Google advertising to then start driving Google trends through the roof. Because right now, look where we are in terms of interest. We're 18 out of 100. So the bull run has just started. We're in the disbelief phase right now. And what this rally is that we're looking at, guys, on the Wall Street cheat sheet guide is the disbelief. You know what comes after disbelief is hope. But during disbelief, there is a correction that takes place before hope happens. And this is what I expect the markets to look like. And then once we see the best time to be entering back into Bitcoin is when we see the open interest in these leverage traders get liquidated back down to around $3 billion or lower within this range right here going into March or April. So if we see this happen on Bitcoin's chart and we see the leverage come back down here, then I would expect the same pattern to start building up again. You guys can see it looks very similar where you see these upward trending support lines happen for an extended period of time. And then we see a quick liquidation event happens. And whatever you want to call it, matrix level timing, orchestrated gladiatorial diversion, or whatever, right? Where they plan this type of stuff and they get together in the roundtable meetings, say, okay, here's what we're going to plan to shake everyone out so we can buy up the dip and we can scoop up their bags down here. Look at the screen right now. If you're driving in your car, pull off to the side of the road, man. Don't be looking at the screen while you're driving. But down here is where the elite buy up all your Bitcoin. And looking on the chart, you can see these periods are when they buy every single time and it pumps the market back up. So I would expect it to be no different and to see something like that happen, where all of a sudden we see a shakeout event happen going into the halving, and then 6 to 12 months, we work our way out of here. We build back up the interest and leverage again. We get all the way up here again. We see another breakout past the high, and then we see another liquidation event happen. We build it back up again, and then we see another liquidation event happen, and depending on where we are in the market cycle at these times, I'll share it with you guys because it changes, week to week, day to day, that we need to be aware of. But the macro thesis doesn't change. We're going up. We're going up in the macro. Google Trends shows it, but in the micro, it's going to be volatile. So I know you guys are ready for that. And looking at the ETH to the Bitcoin chart, the past 7 years, each time that ETH to Bitcoin hit this trend line, this upward trending support line, it didn't take long for the altcoin market to take off shortly after based on this. And so looking at Ethereum has yet to see its rally. Ethereum just broke this resistance right here at roughly $21,500, which was support back in January of 2022, acted as resistance in April of 2023, very similar to the chart pattern that played out back in 2019. When we saw Ethereum break this resistance, it broke up, held it. It actually came back down below it a little bit, kind of consolidated at it during Bitcoin's, actually, I believe this was after Bitcoin's halving. And then we saw breakout again, consolidate at this level right here, which was resistance back in May of 2018, around this zone, and then break out and clear the all-time high and form new highs for Ethereum. So Ethereum is the project that a lot of people don't like because of the gas fees. And I agree with all of you guys, the gas fees are terrible on Ethereum, but Ethereum is a strong project to watch because people use Ethereum to trade in and out of other altcoins, just like they're going to be using Solana for this cycle. So I do believe Solana is going to outperform Ethereum, but we need to watch Ethereum to Bitcoin's price chart to see what's going to happen for altcoins, because first the money moves into Bitcoin, then it moves into, right now it's moving into Solana, but moving into Ethereum and the large caps, then the mid caps, then the micro caps. And so looking at total 2, which is the crypto total market cap excluding Bitcoin, the next resistance we're looking at is anywhere from $900 billion all the way up to $960 billion right here. So we're right in the middle. We're at $780 billion. So if we see a quick correction for Bitcoin before the ETF approvals of 30 or 40K, that would be a micro correction down for the altcoin market. Maybe we come down to 730. Maybe we come all the way back down here to test this range, which was resistance in August of 2022, real quick before we push out of here. That could happen. There could be a liquidation event here, but overall, I think we're coming back up to retest this resistance at some point in 2024 before we see a much deeper correction for the altcoin market. And then we work our way out of here. So I think altcoins are about to go absolutely insane in 2024, whether it's the beginning or the end of 2024, we'll see, but I'm holding a lot of projects long term because I believe this thesis is looking very, very bullish compared to, what happened in the past for this. Once we saw a breakout of this resistance right here for the altcoin market, we saw this take place. We saw a break above, test the resistances at these ranges right here back in May of 2018, which was the complacency stage. And so we tested this, corrected for an extended period of time, then broke out of here, formed a new range, came back down to back test the old range, consolidate, break out again, and then just grind our way upwards. So to be trying to time the markets right now, very, very tricky, very, very risky. The best move is to really just hold these markets, guys, because even if we see these corrections and consolidation periods, well, you don't know how low the dip is going to go each time that it does crash. Yeah, it could be 10%. Yeah, it could be 50%. We don't know. But overall, holding long term, if you believe and you hold strong to the narrative that crypto is going to be going up in the long term, then you can't really lose with that mindset unless they do something wild, World War III, we don't know. But the altcoin market broke out of the accumulation phase and just started a new uptrend. Even with a correction coming, the next 1 to 2 years will make people insane wealth. Now, it is risky, but life is risky. You have a 100% chance of dying at the end of life. So why not fall in love with a little bit of risk here, because money comes, money goes, but how are you going to be able to compound your wealth and pull 5, 10, 15, 20 X's anywhere else? Building a business is how you steadily grow your income, and then taking that so you can do 5, 10, 15, 20 X's to, double, triple, or quadruple your net worth in the crypto market. This is how you do it, guys. So looking at the altcoin market, we see the accumulation phase right here. We just broke out of the accumulation phase for this disbelief rally, forming this new uptrend. And with 1 or 2 corrections happening in the short term in 2024, maybe 3, then we see this massive parabolic wave 3. So what I've talked about in previous videos is what we are forming right now is we are forming wave number 1 in this Elliott wave. And so wave number 1 is the first disbelief rally right out of here. Then we see corrective wave number 2 come in. Wave number 3 is usually the most explosive. So I would expect wave number 3 to push up beyond the all-time high for this. Then wave number 4 to come back down. Who knows what happens with wave number 4? Maybe we back test the all-time high for the altcoin market. Then wave number 5, I believe we're going to be pushing upwards of $3 trillion to maybe $5 trillion, guys. And the reason why is because the total market cap of this whole industry is so small right now compared to how much money, M2 is out there in circulation, and how much debt is out there. $33 trillion in debt. We're at $1.6 trillion in total market cap. And then you look at the amount of money that's in the stock market and the real estate market and the derivatives market, real world assets, how much money is coming into the crypto market with all the news that we've been bringing you guys on what's happening with BlackRock and what they're planning on doing. I don't see why the total altcoin market cap, excluding Bitcoin with all altcoins, couldn't push upwards of $3 to $5 trillion. I just don't see why it wouldn't. I don't see why it wouldn't. Crypto is the hottest asset class right now. It's getting the legal clarity that it needs. They're working on their CBDCs. Bitwise to seed its Bitcoin ETF with $200 million. That's 20x the amount that BlackRock's $10 million cash seed was for its own ETF. And if we look right here as well too, look at the exchanges that are going to be hitting the market.
The news around BlackRock's Bitcoin ETF, now that's really raised prices.
This is the anticipation of finally licensing a Bitcoin ETF, which I'm not as optimistic will happen overnight, but it does show you that the age of the crypto cowboy, the FTX and the Binance, those days are over. This month, in the next 10 days, they will announce M2 in Abu Dhabi, the largest exchange ever that's regulated, with billions backing it and tied to huge financial institutions, so that finally, unfortunately, no American can register on there. But really what they're going after is Binance will probably lose half of its accounts to the new M2, because now you can go off something that the SEC is suing and go onto a compliant exchange that's backed by billions of dollars and huge financial institutions.
So with what happened with CZ stepping down, when they attacked Binance, and the markets rally because of that, and we didn't see fear, uncertainty, and doubt, that being good news hitting the markets, it shows that people that are working with the institutions, working with the elite, working with the regulators are coming into the crypto market. They're launching these exchanges and they're getting ready for this wave of institutional adoption. So there needs to be regulation. I mean, Brad Garlinghouse has been saying this for years, but Ripple is the company that's bringing on these people, whether you like it or hate it. A lot of people say that XRP is the banker's coin. It's, going further away from what crypto was intended. You have to learn how to leverage from that, because if you have no control in the situation, let go of your ego and your pride of like, it needs to be all decentralized. If you have no control over that and you're not in a position of power, how you're going to win is you get as much money as possible so you can be able to have more power, and then you can get more land. You can buy more freedom for your family, because it's not about the money here. It's about the freedom and what you can buy. So listen to this, because Rosie Rios sits on the board of Ripple for a reason.
Joined today by the 43rd Treasurer of the United States, Rosie Rios, to discuss just that. Rosie, welcome.
Thank you.
So Rosie, when you think about the intergenerational wealth transfer that's going to go on, what do you think about?
Yeah. Well, first of all, thanks for having me. And if you're only thinking about it now, you're behind the 8 ball. The train has left the station. I keep saying that, and it's absolutely true, especially when it comes to this topic. So what people need to realize about intergenerational wealth is it's already happening, right? So we're talking about so the boomers, which is my generation, we have the most discretionary income. But this next generation, basically, the millennials, although it's pretty much anyone born in the mid-90s and later, are going to inherit this opportunity to really think about investments in a totally different way. So when you think about those generations, so technically, the millennials or anyone born between 1980 and 1996. But again, look, my son's 26, my daughter's 21. I call them the Robin Hood investor, right? But in reality, these are kids who grew up with the internet, right? So anyone who's grown up with the internet, they see the world as very flat. It's no longer what they're taught at home, what they're taught in the classroom. It's what they see. It's what they've learned, the good, the bad, the ugly of the internet. They're very tech savvy, they're very confident, but they don't have the experience that perhaps a lot of wealth managers, financial analysts, managers, etc. need to really understand how to think about their investments. So for me, it was very important that I get into their heads. My daughter's 21, my son is 26. When I left the Obama administration in 2016, after serving both terms, I studied these kids, I call them kids, for 2 years at Harvard. And I really wanted to understand kind of the social, political, economic way that they think and how they behave. And for them, it's kind of this one and done world, right? It's set it and forget it. Right. Technology means everything to them. They're very, very confident, they're very progressive, and they're very savvy. But again, they lack a lot of the world experience that my generation still has. So even here now in this economic downturn, this unprecedented economic downturn, this is where, in my opinion, the wealth management industry has a huge opportunity. It's no longer about taking them out to golf and buying them dinner. It's really kind of thinking about how to use technology and information in a totally different way. So if you're not already on their app, on their phone, and that's how they access information, if you're not already there, you're behind. You're behind. So for people to really think about how to use technology, how to kind of think about kind of out of the box approaches to investments, and really it's not just about assessing value, it's creating value. And again, really being able to understand how these kind of exotic investments work, whether it is crypto, whether it is thinking about getting into, whether it's the metaverse, etc., these pre-IPO opportunities. The time is now. The absolute time is now.
So the time is absolutely now. I love what she says. She really understands it, because she's not like bashing millennials. A lot of baby boomers will bash millennials because of technology. It's just because they're too stubborn to learn technology. And a lot of millennials will bash baby boomers when each generation has different skill sets, right? The experience is what the older generation has. The younger generation has the technology, the know-how and the technology aspect of things. And so when I was in college, all these business teachers were teaching us as if we were boomers, as if we were a part of the old demographic of business, that business was going to be done that way in the future, when I knew that it wasn't going to be done that way in the future. So that's why I dropped out of school, because they weren't teaching me on how business was going to be run 50 years from right now to the next generation. Because when I'm a 70-year-old person, 60-year-old man, if I make it that long, who knows, if World War III doesn't nuke us all by then, but if I make it that long, well, then the next generation is going to be so intertwined with artificial intelligence within the metaverse. They're probably going to have the chips implanted in their brain and their body. We're going to be like merged with AI, maybe not fully, but we're going to get all these upgrades and stuff in medicine and technology and all this stuff. Well, everyone is going to be on social media at that point, and why wouldn't I want to learn how to position a company, a brand, a product, or a service, or a media brand in front of people through that? And so that's what's been happening. And to position yourself that way, well, crypto is what's absorbing the capital from all these companies that are now starting to market through that. We saw it the last bull run, but it's really the start. Like, look at the stock market back in the late 1800s or the early 1900s. It was just getting started. And then, yeah, sure, there was the crash of 1929, but look how much further we are from that period. So with these big crypto crashes that happen that are 80%, that's nothing in the blimp of 100 years. So if you want to create generational wealth, this is where you do it. And the Bitcoin spot ETF deadline, from this December 29th update right here from Marty Party Music, applicants updated their final applications today. He went through this and posted this right here with the custodian, the authorized participant, the index, the CIK, and the symbol. And so what these mean when you're looking at this is the custodian holds the Bitcoin for the ETF. And so Grayscale, right? They chose the custodian of Coinbase. Most of these are choosing Coinbase, guys. ARC21 is Coinbase, BlackRock, Coinbase, Bitwise, Coinbase, VanEck, Gemini, WisdomTree, Coinbase, Invesco Galaxy, Coinbase, Fidelity, Self-Custody, which is Smart, Valkyrie, Coinbase, GlobalX, Coinbase, Hashdex is BitGo, Franklin Templeton is Coinbase. So Coinbase's stock coin is going to do very, very well over the future as well too because of this. And then also the custodian, the authorized participant, is the market makers and financial institutions that manage creations and redemptions. Now, I found this very interesting because underneath the authorized participants for each of these, we see Jane Street as a main one, but we also see, who do we see here? JP Morgan. Wasn't Jamie Dimon the one, the CEO of JP Morgan Chase Bank, saying that Bitcoin should be banned by the government? And now he's an authorized participant. So don't trust the bankers, what they say, watch what they do. Listen to this.
This is how the rich get richer. Yes. This is not illegal to do.
No, manipulating the news cycle, if you're smart about it, is they can get away with it. Nobody's ever been arrested for anything like
So,
this. On September 12th, Jamie Dimon says Bitcoin is a fraud. He says he'll fire any one of his traders buying Bitcoin. Bitcoin drops 24%. When Jamie Dimon speaks,
people listen.
People listen. So that weekend, we found out that the largest buyer of a Bitcoin fund that's in Europe that buys physical Bitcoin, right? The largest buyer was Morgan Stanley and JP Morgan. And that's not illegal.
He says it's a fraud.
It says we fire anyone that buys it. Yes.
And at the same time, his company is buying it.
His company is buying it.
It's just, so unethical.
Right.
So a lot of these bankers, guys, want to shake you out by saying certain things so they can be able to buy up your bags. It's the game. It's how it's played. It's diversion, right? They'll say one thing to get the masses because they know they have influence, right? And they also know they have shareholders. So if Jamie Dimon were to say, yeah, I'm absolutely bullish on crypto. I know it's going to be the future. And we're actually planning something with BlackRock. We're going to be the custodian, or we're going to be the authorized participant of, their ETF. And I just met with Larry Fink last week. If they say stuff like that, what do you think people are going to do to JP Morgan Chase? They're going to start taking money out and they're going to start dumping it into crypto and do their own custody through Coinbase before their products are ready for market. And so that's what's been happening. It's obvious. And now you understand it because you subscribed to the channel if you didn't yet before. But listen to what Brad has to say about Ripple solving a $40 trillion legacy payment systems problem.
Give me a specific example of who's going to use it.
So one of the things we've always said is I don't think banks will be the first customers. We've talked about payment providers, and so we have run pilots out there with the MoneyGrams, Western Unions, Mercury FX, Qualix, a couple of others. And those are payment providers that have massive treasury operations. Using one random example, you have a payment provider that has hundreds of millions of dollars of negative working capital because they've taken their dollars or the pesos and they've pre-funded and they've pre-funded the account, so they go into Mexico. Once a week, let's say, they'll wire $10 million to Mexico and then debit along the way. Now, sometimes they overfund, sometimes they underfund. The ability to have real-time liquidity is transformational. You know, the global pre-funded, what are called Nostra-Vostra relationships, it represents something on the order of magnitude $10 trillion. If we can make that more efficient and more useful, we can actually accelerate the engine of commerce kind of on a global basis.
So payment providers, banks, financial institutions, the money is flowing in and they're getting the payment rails ready, because the confirmation from Coinbase with institutions getting ready to pour trillions of dollars, not just millions or tens of millions of dollars, or buying Bitcoin, off the books through older Bitcoin holders, BlackRock doing deals behind the scenes to not move the price. When they finally start moving the price and they need to usher in trillions of dollars, Coinbase will be that company that will usher that in.
Begin with the demand. In terms of the crypto trading and associated services, where have you seen the most demand from your client base?
Hi, Will. Thanks very much for having me. Just before I answer this question, it's worth giving a bit of context about the formation of crypto as an asset class. So over the last 20 years, new markets have been created and adopted by institutions. We're talking about FX, treasuries, credit, EM, commodities, derivatives, structured products, and so on. Typically, it takes around 3 to 5 years before clients and their banking and trading partners all adopt a new vertical. But in 2021, crypto markets compacted a 5-year into a 1-year cycle. The end of 2020 kicked off an institutional onboarding year in 2021 as traditional finance participants started to engage in crypto ecosystem in earnest. Institutional clients' volumes basically 10x as they traded $1.1 trillion in volume in cryptocurrency on Coinbase, up from $120 billion the year before. So now to answer your question, I would say every type of institutional investors have been very much involved in 2021, and each for their own reasons. So let's start with hedge funds, which are the primary users and who are using our flagship prime brokerage services to create, maintain, and refine their edge in generating alpha. The second bucket is VCs, and they continue to deploy capital in the crypto economy as digital assets and blockchain technology are increasingly viewed as providing uncorrelated returns. The flows are driven mostly by LPs and asset owners who are looking to allocate to growth investments in a low yield environment. The next bucket, family offices, they enjoy lower regulatory and shareholder obligations compared to institutions, and that enables them to be more future forward and seek higher growth strategies. I would say that they were the earliest entrants to crypto as long-term investors, and this was also driven by the next generations that are more open to crypto and digital assets than their parents. Now, to a lesser degree, I would say asset managers, who are the gatekeepers of roughly 200 trillion of capital. Their investment mandates and fiduciary duties are unfortunately requiring much longer due diligence. So adoption is taking time with this group. And it's, however, a question of when, not if. And at Coinbase, being a publicly listed company, we're playing a huge role thanks to a very robust suite of products and services for this micro segment. Finally, the last segment is about corporates. Very different is not necessarily about investment, but the utility function of digital assets beyond the investment aspect of tokens resonates very strongly with them. Use cases such as merchant payments, treasury management, and NFTs to better engage with their clients and fans are a proof that this segment is re-entering as an early adoption phase.
So right now, because we're in the early adoption phase, and it's not a matter of if, but it's a matter of when, take a chill pill, relax. Guys, don't worry about the day-to-day fluctuations. Don't worry about the 5%, 10% corrections, even 20 to 40% corrections. Don't worry about those. Over the next 2 years, the market is looking like it's going to do very, very well. Now, it would only be some black swan event that nobody can predict that would cause deeper corrections like COVID. But even with COVID, we broke out of there, right? Because they just print their way to solve problems. So for us to go from 33 trillion to $50 trillion in debt, even if there's some catastrophes that happen in the macro landscape with a recession or when the Fed cuts rates really fast, if that causes a crash in 2024, they're just going to print their way back out of that. So back in 2021, Grayscale liquidated its XRP trust that would become the fund for a spot ETF. They did this because of the SEC lawsuit. So Chad on crypto, Chad Steingraber saying that expect a reboot announcement in 2024. And he says, tell me with a straight face that Grayscale isn't about to reboot the XRP ETF fund. Right here on Crypto Watch, it says Bitcoin ETF coin metrics, it says Ethereum USD coin metrics, then XRP USD coin metrics. Those are the top three, guys. Solana is the distraction right now. Yes, I do hold Solana. I do think Solana is going to do well, but I think it's a distraction right now. The VCs are pumping that up, and I've watched a few videos. I'll be sharing that with you that will show why I believe that's happening and why XRP is still the best hold in my opinion. It's the number one in my portfolio. Now, there are other projects that I'm bullish on. If you guys want to see the top 10 hottest crypto coins for explosive growth in the top narratives for January of 2024, if you're researching the best crypto to buy now, I put this out December 25th on Christmas. There's some other videos on the channel. I encourage you guys to check out when you subscribe to the channel after this one. But check this out. Crypto Hulk just posted this. He said, wow, Japan suddenly announces not just Bitcoin, but all crypto stock market trading. It's not just happening in the United States with Coinbase, it's happening overseas, and overseas countries are actually beating the US.
Hey everybody, check it out, this is Crypto Hulk. You got the Bitcoin ETF going on. It looks like 2024 is really going to be when crypto gets into the securities area. This is in Japan. We've already talked about United States with the SEC. We've already talked about Hong Kong. Now Japan, right here, Osaka Digital Exchange. Now they're talking about going crypto 2024. And you got here all kinds of Ripple partners lined up. I'm going to show you right here who's involved in all this. Here we go. Japan's SBI Group adopt XRP right there. SMBC, Japan Post, they join SBI, Ripple, Nomura and Ripple partner. And look at this, Ripple Coin Japan. This is all related. Now here we have the R3 Corda platform used in Singapore. This is the Singapore 6 digital exchange. All this stuff's going to be running on XDC.
So they're preparing for this. XRP, XDC, HBAR, Algorand, a lot of the other ISO projects, guys, keep on your watch list. I made a video about those too. You can check out on the channel. But looking at this chart, the Tether market cap dominance right here. So when we spot these corrections that take place in the market on the altcoin market and Bitcoin, where Bitcoin and altcoins sell off, then we see Tether rally up. So right now, Tether's RSI is sitting at, Tether's dominance is sitting at 35. So it's close to oversold conditions. We were well below 30 down here back in early December. And so when Tether gets down here, to see a bounce for Tether to the upside would mean that Bitcoin would be correcting down to 38 to 40K, in my opinion, if we see Tether bounce in dominance and we see Bitcoin sell off in the short term before the ETF approval. And then I would expect a continuation to the downside for Tether. Or we just kind of grind our way down. We just continue to the downside going into the ETF approval. And so if you're trying to time the markets to get a better entry point and you haven't entered the markets yet, don't get too greedy to the downside, guys. Don't get too greedy thinking that Bitcoin's going to drop to 38 or 40K before ETF approvals, or that this correction is going to be 30 or 40%. It might not even be that deep. We don't know. But one thing is for certain, we're going camping on the beaches of the moon as we back up our truck all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. The BRICS nations, Brazil, Russia, India, China, South Africa, Saudi Arabia, are all teaming up to gang up on the US dollar and create their new currency, CBDCs, guys. Gold-backed currencies, commodity-backed currencies, XRP leading the charge, Ripple leading the charge, and XRP preparing to make you the wealthiest person in your family. And so with distributed ledger technology, blockchain tech, gaming, artificial intelligence, poising to be the leader of this bull run, if you want to discover our top altcoin picks first and get early bird access to our financial education platform when that's launched with no previous crypto trading experience required, go to bullrunners.com right now. Click the button on the page, put in your best email address. It's free to get access right now. You can join our free Telegram group. You're going to get breaking news updates because we like to give you the best information to help you prepare for the worst that's yet to come in this economy as we back up our truck all the way to the bank. So I see you guys on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.